Welcome to Finance It TV. In our latest video, we're diving into the controversial history of Fannie Mae and Freddie Mac, two government-sponsored enterprises, GSEs, that played a significant role in the U.S. housing market in the 2008 financial crisis. Join us as we explore how these institutions rose to prominence, the factors that led to their downfall, and the lessons learned from their near collapse. The origins of Fannie Mae and Freddie Mac. Fannie Mae, Federal National Mortgage Association, was established in 1938 as part of the New Deal to expand the secondary mortgage market by securitizing mortgages. Freddie Mac, Federal Home Loan Mortgage Corporation, was created in 1970 to provide competition to Fannie Mae and further expand the market. Mission and business model. Both GSEs aim to increase homeownership in America by purchasing mortgages from lenders, providing them with liquidity, and packaging these loans into mortgage-backed securities, MBS, sold to investors. This system helped stabilize the mortgage market and made home loans more accessible to a broader range of Americans. Growth and market dominance. Over the decades, Fannie Mae and Freddie Mac grew to dominate the U.S. mortgage market. By the early 2000s, they owned or guaranteed about half of the nation's $12 trillion mortgage market. Their implicit government backing allowed them to borrow at lower rates, further fueling their growth. The road to crisis. The 2008 financial crisis exposed the vulnerabilities in Fannie Mae and Freddie Mac's business models. Aggressive pursuit of market share, lax lending standards, and exposure to subprime mortgages led to significant financial strain. As home prices plummeted, defaults surged, and the value of their MBS portfolios collapsed. Government takeover. In September 2008, the U.S. government placed Fannie Mae and Freddie Mac into conservatorship under the Federal Housing Finance Agency, FHFA. This move was intended to stabilize the housing market and prevent further economic fallout. The government provided $187 billion in bailout funds to keep them solvent. Consequences and reforms. The near collapse of Fannie Mae and Freddie Mac had widespread consequences, including stricter regulations and oversight of GSEs. The Dodd-Frank Act introduced reforms to prevent such a crisis from happening again, and aimed to reduce the risk posed by these institutions to the financial system. Lessons learned. The story of Fannie Mae and Freddie Mac offers crucial lessons. 1. Risk management. Effective risk management and prudent lending practices are essential to maintaining financial stability. 2. Regulatory oversight. Strong regulatory frameworks are necessary to oversee large financial institutions and prevent systemic risks. 3. Government intervention. The role of government in stabilizing markets can be critical during financial crises, but it also raises questions about moral hazard and long-term sustainability. Conclusion. The history of Fannie Mae and Freddie Mac is a cautionary tale about the dangers of excessive risk-taking, the importance of robust oversight, and the critical role these institutions play in the U.S. housing market. By understanding their rise and near collapse, we can work towards a more resilient and stable financial system. Share your thoughts on the Fannie Mae and Freddie Mac story in the comments below. Thank you for watching, and we'll see you in the next video.